Hey traders, welcome to Charts and Coffee. Happy Wednesday, everybody. Hope everyone is doing well. All right, we're taking a look at a couple symbols this morning as we kick off the morning. Mostly things that I know I'll be managing or want to get into this week. This week is mostly data around retail sales and home sales with a ton of FOMC speakers. So that's kind of where we're balancing what it is the different data points are going to be that could trigger those high impact volatility opportunities where if I'm waiting for a pullback, those are oftentimes going to be the timing. So what's the problem a lot of traders face? First problem is I don't know what to trade. So if you've been watching Charts and Coffee for any period of time, you know the answer is look for the trend. Money is always flowing somewhere, right? It may not be as many places as we'd like, but money is always flowing somewhere. The second part is, when do we get in? Do we get in at the highs? I don't like to do that. I want to say never, right? I never want to be getting in at new highs. I love being in a market after a dip and then it goes to new highs. Case in point, we've got a long position in gold in the Sector Secrets Mastery, and we have a long position in NVIDIA. So buy the dip, get the new high. That's kind of the ideal formula. So focus on the trends, wait for the dip. Sometimes those dips are going to accompany scheduled events. I call them hot zones. So if we can watch the calendar and say, all right, I've got a list of things that I would like to be in. For example, I'd like to be long the S&P, right? That's something we did last week. We want to do it again this week. We scaled out of SPY calls that expired on October 21. I'd love to get into probably some short-term expiring, maybe next week, calls if we sink into a specific range. So if we're looking for support, what are we looking for? We're looking for a buy the dip. Let me grab my drawing tools here. But a dip sounds really random and super subjective, but the idea is right. It's good, which is if something is going to continue higher, pullbacks are healthy in the context of a trend. They're normal, they're expected. So why not take advantage? And that's where this is one version of a dip. This would be a second version of a dip. So this is based on volatility. This is based on the mean reversion. Now there's no right or wrong. They're just two of them. When they overlap, when they stack, it's even better. So what I'll be looking for is the opportunity to buy a dip. The dip is defined by either a mean reversion or it's going to be defined by the volatility zone. The volatility zone indicator that I use is called the daily price movement range. And what it uses is a look back, historical look back of typical movement in a specific symbol. So it's not as if I'm applying a certain percentage to all the symbols equally. There's a personality to every symbol. The S&P moves differently than the NASDAQ. The NASDAQ moves differently than the Dow, and the Russell moves differently than all of them. So we look at the historical volatility of each symbol. And then we look and project, right? We look for these golden gray zones because they're printed, they're projected on the chart automatically. All right, so that's going to be the zone. I absolutely want to be long S&P, but I need it to move a little bit lower before it does. So find the trend, buy the dip, wait for a catalyst for it. And right now, that's what I'm lacking. I'm lacking that catalyst where the green candle is going to trade into that gray zone and I can get long. So that's just a matter of now waiting. Trading is waiting, right? Trading is waiting. And the waiting is where the discipline comes in. And that's where a lot of traders struggle. If you're a momentum trader, this is going to feel a little like brushing your teeth with your left hand, right? It gets the job done, but gosh, does it feel weird. Ultimately, this is going to be a style, what I'm teaching you all here, that's going to be used within the minority of traders. Most traders are buying new highs. Most traders want momentum to be long, and there's nothing wrong with that. But I really don't want to do what most traders do because I know another most statistic, and most traders are net losers and in their trades. I don't know what they're like as people, but they're net losers in their trades. So I ask myself, if I know what most people are doing, maybe it's going to behoove me to not maybe follow that same path, right? Okay. So that's what's going on with the ES. Definitely want another buy the dip opportunity in gold. And if you checked out the free or premium video over at the Simpler Trading YouTube or the premium video over at my top tier Outlook newsletter that's in the Simpler Trading membership, that, by the way, if you're a Sector Secrets Mastery member, you get access to that as well. You know that financials are definitely something I'm looking at. So right now, I don't have an opportunity in the S&P, but I am looking for an opportunity in financials, mainly because financials are, at the moment, the sector that's sort of clear of this blasted earnings season's nonsense. So much volatility because there's so much emphasis. Is a company really in this binary doom or, or absolute, doom or bloom, right? Is a company just going to go crazy to the upside because of all this productivity from quarter to quarter? Same thing goes to the downside. And what earnings has done has basically reduced, I don't know what's on my glasses this morning, has basically reduced a stock, a company to quarter to quarter to quarter extreme report cards. And it just doesn't work for a longer term view. Now there are real things to consider. For example, I don't know how many of you saw yesterday that McDonald's had some pretty bad news. Apparently, the quarter pounders in Nebraska, in Colorado, I guess more so than other places, had E. coli. I don't know all the details, but it's going to open up under $300 today. It's actually recovered. I know that when I was watching the news yesterday, it was trading around 280, 285. It's recovered a little bit. They're taking quarter pounders off the menu in those places, and they're reacting pretty swiftly. And you can see it's trading around 293. Those kinds of things I'm going to have to remember, that when McDonald's opens down a good bit, where is the weighting in McDonald's, and what could happen to sectors that have this weighting? So I'm going to jump on over to consumer discretionary. Consumer discretionary is going to be disproportionately affected by the weighting of MCD within it. So again, it's not a market-wide phenomena. It's specific to this particular sector ETF, and then a number of maybe other ETFs, perhaps the weighting in the broader averages. So it might be a little bit of a drag, maybe, on the Dow. Does the NASDAQ give a rip about McDonald's? Not really, but consumer discretionary is a funny sector. It is weighted in the NASDAQ. Oh, the smoothie has arrived. Raspberry? All right, got the blueberry. Okay, got the blueberry smoothie today. All right. So, people have been asking about the smoothie recipe. So this is kefir, little maple syrup, and blueberries, organic blueberries. All right. Good for the brain, I guess. My mom gave it to me, right? If your mom gives it to you, it's got to be good for you, right? Okay. Blueberry smoothie today. So if we're taking a look at what's going on, again, in individual stories, remember, it's not a market-wide necessarily impact phenomena. It's going to be specific to certain sectors and maybe a certain index. If that's the case, maybe I start looking for some opportunity. It's an unforeseen catalyst, right? I wouldn't call this a hot zone because it wasn't scheduled. It's an unforeseen catalyst, but maybe it presents some opportunity in the XLY if McDonald's drags some of these other names lower. What would I be looking at? Interestingly enough, this is one of the most eclectic. I say XLY and XLB are some of those eclectic groups of stocks under this umbrella of a particular sector. This is, again, consumer discretionary. So Amazon, Tesla, Home Depot. So McDonald's, Booking, TJ Maxx, Lowe's, Nike, Starbucks, Chipotle, and Airbnb. Pretty eclectic. Anything that has a trend here that might be drug lower, including maybe the XLY ETF itself, could be an opportunity. So keep in mind, there are scheduled events that we're going to have to contend with. And of course, there's going to be any number of unscheduled realities that we have to deal with. Speaking of scheduled events, the Bank of Canada, you can see there, 9:45 today. Bank of Canada, in some ways, has been having even more impact on the US equity markets, but most definitely treasuries and currencies, even more so than the European Central Bank. So I've noticed that Bank of Canada, many of you probably noticed Bank of Canada events have a big impact, 9:45 a.m. Be aware of some volatility, not to be undone by the Bank of Canada. ECB President Lagarde is speaking at 10 a.m. And we have existing home sales. What's interesting about existing home sales, and if we were talking 3 months ago, I probably wouldn't care much about that. But right now, everything is about the consumer, right? Everything is about the consumer. Do they have jobs, right? And are they buying stuff? So retail sales, home sales, these are going to be really important, right? Do they have a job and are they buying stuff? So the consumer has in many ways now supplanted the sort of all-consuming focus that we did have on inflation as we were waiting for the Federal Reserve to finally cut rates. Now that we're on the rate cutting cycle, the inflation metrics, the PMIs, CPIs, PCEs, they're important, but not quite in the same way they were before we started cutting rates. So now, as the rates are going down, we want to see that consumers have jobs and they're spending money, right? Lower borrowing costs should be bullish to the equity markets because the belief is lower lending costs, more borrowing, more lending, right? More buying. Boom. So that's where some of the basic metrics that we need to watch as traders would be. We also have crude oil inventories. We have FOMC member Barkin at noon. So keep an eye on these particular scheduled events, especially the two that we'll deal with first this morning. BOC at 9:45, ECB at 10 a.m., along with existing home sales. So now we know the timing maybe of some of those entries because I'll use the timing of those events to remember that there's likely going to be some volatility. And if that volatility can carry price to a level at which I have expectation of a dip, right? Whether it's that mean reversion we talked about or the daily price movement range, we're in good shape. There's another handful of sectors. So aside from XLF, the SMH has been pretty strong. We've been taking advantage of that mostly through NVIDIA and Taiwan Semi. Those are my two favorites within SMH. We also have some interesting strength in industrials. So let's take a look at this XLI. All right, XLI, the industrials, is GE CAT RTX. And there are a couple uptrends here that are worth keeping an eye on, whether that be UPS, ADP, Uber, and RTX. What are my best choices in this group? The trends, right? The trends. Okay. What don't I want to in any way look at? I'm going to leave GE alone, red candle. I'm going to leave UNP alone. I'm going to leave LMT alone. I know those red candles came with the earnings. Again, reason number 712. I hate earnings season. It's really just unnecessary drama. Look, in the markets, when we're trading, when you and I are trading, we either have a drama problem or we have a math problem. And that's just kind of where I've found myself landing. Most traders and investors love the drama. What's being talked about, what's gapped up, what's sold off, what did earnings say? That's a drama problem. And that is not a path to account growth. The rest of us, right? You and I, why are we here? We know we have math to solve. I think of that one of my favorite movies. I don't have the no rerun rule on this movie, The Martian, especially the director's cut or the longer version. It's really, really good. The Martian. And you remember at the end of the movie, if you haven't seen it, see the movie. This is not a spoiler, but he's talking to a group of students and he says, you're going to run into problems in space. and you just solve one problem, and you solve the next, and you solve the next. That is our job as traders, but we have to know where we don't want to be focused, right? Part of it is just knowing where to focus. And so if I have a red candle, thanks but no thanks. There's better places to look for follow through, right? So just look at the right place. Do I like Uber, Jazz? Absolutely. Uber would be on that list. Yeah, absolutely. And XLI itself, okay, would be on the list as well. As long as there is, again, let's stick with the math problem. Do we have sufficient open interest in the XLI to be able to buy an option that has at least 500 open interest? That's the minimum, and I don't love that number. I like to see it above 1,000, but at least 500 open interest. And the XLI for November 15, which is 23 days to expiration, it does have some pretty darn good open interest. So keep an eye on, say, the 136 or 135 area if we get down to that level. UPS could be interesting as well off the 130 level. Let's go take a look at that. Might have to take a peek at November 15, 130s. They're a little spendy, but there's plenty of liquidity there. So Uber, some good proximity, and UPS. Yeah, we do like those. I'll leave RTX alone. I'll leave LMT alone. Give a symbol that's just had earnings, major upheaval sometimes, especially for those two stocks. Give it at least one, if not two sessions for the dust to settle so you can see what happened, right? Right now, it's a very murky picture. It's dusty after the earnings explosion. Give it a moment, right? You don't have to go wading in. I can't see anything. So it doesn't hurt to wait. It does. Again, chasing after those is a drama problem. We want to solve math problems, right? Where are the price levels, the volatility levels? Where's the structure of the trend? Where is support and resistance? That to me is that math problem. The price is going to help us out there. All right, what else do we have that's on the radar? I want to keep an eye on gold, and I want to keep an eye on gold miners. So that's going to be GC, which we have an open position in. And then I want to start looking at GDX a little bit more. So as long as gold continues to higher highs, Newmont mining might be a really good place to look. Newmont mining and GDX itself. So put those three symbols: gold via GLD if you're an options trader on ETFs, GC futures, MGC futures are great. Newmont mining and the GDX ETF itself. All right, gang, that's a wrap. As always, thank you so much for being here for Charts and Coffee. I will see you all tomorrow, same time, same station. Be good to each other.